Welcome to NinjaCryptoTrader. In this video, I'm showing you top 3 reversal trading strategies for day trading crypto. So before we get into these strategies, first we have to understand what is a reversal. A reversal is simply a change in direction of trend. So you can go from an uptrend to a downtrend or from a downtrend to an uptrend. So one common mistake that many people make is that they believe that when there's a significant movement in price in one direction, a reversal is going to occur. This, however, is not right, as significant movements in price are mainly supported by a lot of momentum. Therefore, they're following a certain trend. Thus, trading against this will be trading against the trend, which rarely works. So let's move into the first strategy, known as break of structure. So to use this strategy, first we begin by finding a trend. So we have a nice uptrend here, and what we're going to do is draw a trend line to show this uptrend. So with uptrends, you have the characteristic of higher highs and higher lows as shown here. Now next thing we need to do is to look for the point at which the price breaks the trend line. So at this point here, we have a break in the trend line in that price goes below the trend line. Now this does not necessarily mean that the trend is reversing. We have to look for more signs to confirm a reversal. These signs that we're going to be looking for are signs of momentum loss. So three signs that we're going to be looking for here. First of all is when price fails to form a higher high. So we can see this high here, and when the price comes down, bounces off the trend line, the next high is lower than this high over here. So that is the first sign we're looking for momentum loss. Secondly, we want to see a break in the trend line. And thirdly, we want to see a current downtrend. Now, a downtrend is characterized by lower highs. As you can see here, the high is getting lower, and lower lows. The low here is getting lower. So there is a current downtrend. This is a sign that the trend has reversed, and you can now open a short position from this uptrend. Another sign to show momentum loss is that you can look for a double top or a triple top. As price comes down and tries to bounce back up, it will either form a double top or a triple top. This can also be another sign that the trend is about to reverse. Now, other than that strategy, we can move on to the next strategy, which is known as bounce off a key level. So a key level is basically an area where price comes and bounces off, sort of either a resistance or support. Here we can see a support at this level. Price bounced off this level. So we can draw a support line to show this area of support. Now as you can see, price comes and bounces off this level, goes back up and bounces off this level again. But this is not what we're going to use to confirm a reversal. We are also going to bring in a certain indicator known as the stochastic, which will be able to show us overbought and oversold zones. So once you come to your indicators, type in stochastic, and here it is. So it will appear at the bottom of the chart, below the chart here in this area. And as you can see, it shows the area above this purple area is the overbought zone, and below is the oversold. So what you'd want to do is change the settings and make the smooth K and the smooth D the same, so 3 to make it look a bit better. And there we go. So when price bounces off here and bounces off here again, we want to make sure that here it is in the oversold zone, as that is the support. We're looking for the oversold zone. And when the stochastic moves out of the oversold zone into this middle area, that is when you can put in your long trade as the trend will now have reversed. So that is the second strategy that uses the stochastic as well as a bounce off a key level. Now the third and final strategy is almost like the bounce off a key level with the stochastic, but instead of the stochastic we are going to use EMAs, and more specifically the 10 period and 20 period EMA. So EMAs are generally used to show changes in trend through crosses. So first of all, we want to find another key level, which as you can see here. So we draw a line to show this resistance point as a key level. Now once again, the bounce does not necessarily mean that the trend has reversed. We are going to come back to indicators and put in two exponential moving averages or EMAs, and set one to be a 10 period EMA and the other one to be a 20 period EMA. So let me make this a bit thicker so that you can see the blue line is a 10 period exponential moving average, and we set this other one to 20. First of all, it will be the orange line. So as you can see here, the point where the blue one crosses above the orange one and below, this shows a change in trend. Now when we get this bounce of this key level here, the second bounce, it does not necessarily mean the trend is about to reverse. What we're going to look for is a cross below the 20 period EMA, which would show that now we are in a downtrend, and now you are able to open up a short position to which will lead you to get profits. So those are the three strategies that we can use to determine a reversal in day trading crypto. Now if you like this platform and want to use it for trading crypto, I am trading on Bybit, and if you can go ahead and create an account using the link in the description below. Also, if you do not have an account, new users are given a bonus on their first deposit. And if you enjoyed this video, please hit that like button, and for those who are new, don't forget to subscribe and hit that notification bell so that you don't miss more awesome videos on trading strategies. And by this, I am signing out.